Per usual, everything on this channel is for educational purposes only and is not intended as financial advice. Teaching Tech Tuesday once again. Let's take a look at another type of Ichimoku Cloud trade setup that so happens to be a possibility currently on the daily. Now, this type of content, some inside baseball, is called evergreen content. This is educational information that you can look back on 3, 6, 9, 12 months from now. Kind of serves as a little time capsule, potentially for an altcoin bull run, like I'll talk about at the end of this video, as well as a time capsule on the volatility expansion upcoming that we're going to be experiencing here on Bitcoin. All the same rules apply for the edge-to-edge trades as with the TK cross, right? The cloud rules are pretty much exactly the same throughout many of these trades. We want these specific settings for a specific reason. That reason being doubling the settings decreases the noise, increases the conviction, the hit rate, the success of your trades. Higher timeframes always win. In this case, for the edge-to-edge moves, you will find larger cloud thicknesses on higher timeframes. So the weekly, for example, as I'll talk about at the end with the alts, some of those clouds are 2,000% moves potentially, right? If I'm trading alts, that's what I want to trade. I want to trade something that has some ridiculously high potential, even though theoretically the market cap may never get that high or it may not be completely successful. At least it gives you some idea visually what to potentially expect. Now, again, classically, they will tell you when you're learning cloud that prices in the cloud are no trade zone. You should not trade that. Expect maximum volatility. This is a trend determination period generally. However, again, with these settings on high time frames, they are typically, at least have been for Bitcoin, specifically on the weekly, have been trend reversal setups that have worked out almost 100% of the time on the weekly. I mean, if you want to backtest it on the weekly, it's probably 100%. The daily, a lower hit rate. We'll talk about that. So what are we looking for in the edge-to-edge setups? Like I said, it's a trend reversal trade. These are rare. These don't happen typically. On the weekly, it's once a cycle. We don't have 500 years of data to do backtesting on this. Eventually, the hit rate on these may decrease. So far, so good. Depending on the alt you're trading, you're not going to have enough data to look at the weekly. You're going to have to look at the daily. If you're looking at some altcoin, I'll just say something like TIA, right? Something that probably won't exist in a couple of years. You're going to have to go down to a lower time frame to find these type of setups. The thicker the cloud, the better the risk reward. That just tells you, again, there's extremely high potential for what almost typically works out as mean reversion, which is just a 50% retrace of the bear market effectively. And you're usually going to find the thicker clouds on the weekly time frames. You can find them in all time frames because inevitably someone's going to always ask me, can I do this on the 15-minute? And it's funny because the video that I watched, Rob Booker, this specific video, okay, watch this video because this is where I got all these ideas from. Doubling the cloud, edge-to-edge trades. That's from this specific video 11 years ago. What is the first comment? Can I use this strategy on the 15-minute? Like, look, I get these comments too. I know how this works. Everybody wants to take trades. They think they're a trader. They think that's what trading is. When in reality, the best traders find the best setups and take those trades. They're not looking to take trades. They're looking not to lose money. They're looking for asymmetric risk reward opportunities, which is what an edge-to-edge move sets you up for. I've noticed throughout the years with these setups, you usually want a congruent TK cross for confirmation. I'll point that out. But what that means is if you're expecting a bullish reversal through a bearish cloud, you want to wait for the bullish TK cross first. Specifically on the alt clouds, we're not there yet on most of the bigger setups. So that is an interesting way to watch this, to set alerts, right? You're either waiting for an entry in the cloud and or a bullish TK cross. The target, again, visually, it's great because it's always the opposite edge of the cloud. So once again, the thicker the cloud, the better the trade. And usually how this works out is you have a mega downtrend. Sometimes it's weeks, sometimes it's years. Then price flattens out. And then you establish some 50% level over a long period of time. I mean, we saw this with GME and AMC too, right? Like this, it doesn't matter. Pick a chart. Hood, Robinhood, I talk about that all the time. You see this type of market activity stereotypically on any market. your stop loss for these trades is always the initial cloud level entry or the Kijun, depending on how late we are in the trade. I'll talk about that. You can always use trailing stop losses. Williams fractals are great for this as well, which I've talked about in different videos previously. So these usually have an extremely high hit rate. Very easy to quickly backtest this, because that's another question I get, you know, what's your backtesting data, Josh? I'm making fun of these people, but it's like, look, guys, just put it on a chart and look at it, right? It's not that hard to see it. What's the backtesting on XYZ alt? I don't know. Look at it, pull it up. It's there. You can find it. You know, it's not that hard. These don't happen every day, so it's really easy to visually just check, right? Are these full of baloney or not? Typically, we also see some additional type of confluence. We typically see low volatility, and there tends to be a chart pattern associated with trend reversals typically, especially on the weekly. Whether that's a success or a failure of the pattern kind of dictates whether or not you get this edge-to-edge trade at all, right? Usually, you know, the best trade setups will almost always have a chart pattern on their side. Another question I get, you know, like on Solana or on Link or on Cardano, on the weekly cloud, are we there yet? Are we there yet? Are we there yet? This stuff can take months to complete, okay? Which is another reason why you want to use trailing stop losses, or just pay attention to the Kijun on the cloud when it's in the weekly cloud. As long as it's above those levels, the trade is very likely to be okay and fine and active, and it's just going to take time, right? So at that point, you're eating maybe opportunity cost or funding. But I want to say very rarely do these reverse like 80% complete and then roll over. But again, that's why you use trailing stop losses. Failures on the initial entry or quick failures of these trades almost always lead to strong trend continuation. I'll talk about that with Bitcoin. We saw it in 2022. We saw it in 2017 with Bitcoin. We may see it with some of these alts where you get kind of this head fake, Lucy pulling the football away from you type deal, where it looks like the trade triggered successfully and then it falls out of the cloud, or you get a bearish TK recross below the cloud, something like that. Or in the Bitcoin case on the daily, what we're looking for is a bullish TK cross with price above cloud. And again, some alts never recover. If you get the stop loss signal, take the stop loss signal, because these take so long to set up and are so rare that, again, they're almost always never going to be wrong. And even if they are quote unquote wrong, you can always take the signal later, but it saves you the potential bearish continuation or bullish continuation on the Bitcoin side. On the daily, right? A lot of people are looking for 35, expecting 35. If we break the Kijun, if we hold above the cloud, if we go to bullish TK cross, that is a signal that says, hey, you know what? We're probably not going to see 35 super soon. We're probably going higher. So that would be the stop loss on the bearish side. And then if you pull up a chart ever and, you know, it's in the middle of the cloud, or it's like 25 to 30% through the cloud, you know, like, what do I do? It's just a judgment call, right? You know, if you pull up Solana today and you look at it, it's almost completely through the cloud on the weekly. It doesn't mean you can't take the trade or expect the 140 level. It's just the risk reward setup is diminished, right? Because you're entering the trade late and you're probably better off just watching a different time frame at that point. Doesn't mean the trade won't happen as expected. It's just not the most ideal thing, which is why you want to watch these setups way in advance. So here's the time capsule part for 2/6 for today. When I look back on it, I watch my own videos disturbingly often. But when I look back on this, right, these are the sort of options where I'm going with this in my head. You can always do nothing. That's always an option. Stack sats, DCA, stay in cash, whatever. Doesn't matter, right? That's always an option, doing nothing. You can buy volatility now. One way to do this, I'm not going to explain the option side of this, but it's called a straddle. So basically you're long and short at the same time. I'll go over the levels in the stop losses that you'd be looking for. I've only personally taken trades like this like a couple times historically. Basically, you know a move is coming. You're expecting high volatility. You can get run over on fees with this. You can get run over with if we spike up to 43.7 in this current case, and that stops you out of your short, and then we go down to whatever the lower low is, and that stops you out of your long, right? And it's just a mess. That's like the nightmare scenario for this type of setup, which is maybe why an options play would be better. But you're going to have tight stops regardless, right? You're expecting a move, just don't know necessarily where it's headed. I still think we lean slightly more bullish than bearish, even though the bullish setup has a lower risk reward. Anyway, we'll take a look at that. Or you can wait for the move, right? On the bullish side, you'd be waiting for a move above 43.7, which is roughly the horizontal resistance. You're waiting for the daily close in the cloud, which, we're currently just skating above that. It's very thin ice. Something else to watch for would also be increasing volume. If we get, definitive volume that says, all right, we're selling today, then that's it, right? That's enough to tip the apple cart, and that destroys the reversal pattern, suggests failure on the head and shoulders, and it suggests a move down through the cloud. I always like to look for other stuff besides the cloud to sort of build the story. I always think of Rumsfeld with his like known unknowns, unknown stuff, right? You always want to see like where are the levels that are going to be important here. I'll talk about B-bands. I put out a tweet thread on that yesterday. We also have some interesting moving averages down there. There's some chart pattern stuff we can look at. So there's some other stuff that's roughly fits the narrative, right? It makes sense. Like if we go down, this is where we're going to find support. If we go up, this is where we're going to find resistance, that type of thing. We'll map out the levels. Got some news catalysts to pay attention to if those GBTC Genesis sales kick off. And then legacy, dollar strength has been waning, maybe because of this New York Community Bank weakness, potential failure by the end of the week. And then we've also got just crazy bullishness in the Mag 7. So I talked about these edge-to-edge trades in a screener video a while back, almost a month ago now. I'll put a link to that video in the description of this video, but you can use something like that to put together a list of potential trades based on the risk reward, right? So some of these trades are going to have, like Filecoin, we'll look at that at the end, Flow, Axie Infinity. Some of these have extremely high potential payoffs that won't necessarily always pay off. So keep that in mind, right? They also don't yet have the bullish TK cross, most of these. So you got to keep that in mind. And again, you can do that through the screener and just mathematically figure out, is the Tenkin above the Kijun or not? So if we look at the charts, this is the power of this type of setup. You see it weeks in advance. This is 2015. Let's take you back to 2015 when I first learned about this stuff and I saw it play out in real time, right? We know where this goes. This goes to the top of the cloud. I wasn't as confident in this type of setup as I am now, but seeing it play out a few times in a few cycles, yeah, that makes sense. You can always take these trades wherever you want, right? Nobody cares, right? Buy the lows, be a hero, catch a knife. Doesn't matter. But the cloud is telling you the best risk reward based on confidence that this plays out is at the cloud itself. And we'll get to some alts at the end. Again, I'll point out some specific examples there. Here's the most recent example in 2023. Sometimes you will see price kind of be allergic to the cloud, right? We just refused to close inside the cloud. Eventually we pushed inside of it. Then we closed below it. And it was a messy journey. But again, this entire time, even months in advance, the cloud, which was projecting this 50% level, is telling you this is where price is headed. This is where price is headed. Very rarely does it happen as quick as it happened. Okay, it happened in a matter of weeks, largely thanks to the ETF stuff. But that isn't common. We didn't drop below the weekly Kijun, which was a good sign. We eventually pulled back into the cloud. So you could read this as a stop out. You could read this as go long here, get stopped out here because we're below the cloud. There was also a potential mega head and shoulders that arguably failed and we went higher, right? In an alternative universe, this failure signal on the edge to edge goes lower. We break below the Kijun, we get a bearish TK cross, we go to 10K, right? Whatever it is. That didn't happen on this timeline. We went to 40 plus instead. And just to point out, we did have a bullish TK cross on that before going higher. So currently we have a bearish setup. We have the opposite setup. We have a bullish cloud, the bearish TK cross, price dangerously close to closing inside of this cloud. So once again, you have to make the decision. Do you do anything? Do you hedge what you have? Do you take a net short position? Do you wait for lower lows? Sometimes when these start to close in the cloud, because of that low volatility, you don't really get a lot of opportunities to enter the trade. So you kind of have to cheat it a little bit, because once we start to sell off, in this case, that's kind of it, right? Typically what you don't necessarily see is multiple days of gingerly holding this 42K level. I think that would be unlikely. Possible, but unlikely. Usually what you'd see is a break of lows, a break of 40 within a matter of days, And then within the week, like we're down to 38, right? That's why you sort of have to catch these before they happen. And the cloud helps you do that. You can also see here, we attempted to go lower, didn't have the congruent TK cross, which is typically what you see. And we've seen that in 2021. I've talked about this a couple times. Very similar, right? Tried to poke below into the cloud, didn't have the bearish TK cross. Eventually got it, and then very quickly, right? We closed inside that cloud, and that was it. We're making lows, we're making lower lows. So that's kind of what I expect here. If we break down, if this, then that. If we break down, I expect it to be very violent and angry very quickly, which is again why having a straddle type of setup is maybe appropriate, because that way, you're ready to go. Daily 2022 cloud, we failed every single bullish reversal on the 2022 cloud through the cloud, right? The success of the trade would be hitting the higher end of the cloud. Here's your entry, here's your bullish TK cross. Didn't quite make it. Again, this is an important reason why you're using some sort of stop loss and or trailing stop loss. The trailing stop loss would have gotten you out here, Kijun stop loss out here, cloud stop loss, somewhere down here. But all of this is screaming at you, get out of this long trade. Very similar thing happened here. Close inside the cloud, bullish TK cross, could not hold it, just straight down, right? Almost within the week, you are out of the cloud again. Take that signal 10 times out of 10. Had an entry here, did not have a bullish TK cross, so that one didn't actually trigger. But then finally at the very, very end, you get a bullish TK cross, price goes through the cloud, you've got an Adam and Eve chart pattern on your side. So you do have a little bit of a confluence there. This was post FTX blowing up, right? Meanwhile, these potential moves through the cloud previously or prior were in the setting of, Terra Luna blowing up, 3AC blowing up, Celsius blowing up, right? There was all sorts of stuff blowing up, bombshells going off left and right. Not to excuse the technicals, but you'd have to read the room a little bit to know what's going on. Here's 2018. Again, very similar type of issues with the bullish reversals. We tried to trigger this trade a couple times, got close to hitting the edge in mid 2018. Didn't even get close. In early 2018, I don't exactly remember what was going on here. One of these was a ETF denial, and then we never really made it back in the cloud. So this entire time, the cloud is trying to keep you out of the long side over and over and over. Even if you took these edge-to-edge moves, it's telling you either via trailing stop losses on Williams fractals or the cloud itself, get out, get out, get out, get out. Just get out of the long. Get out of the long. Until the very end when you have a chart pattern on your side, in this case an ascending triangle. And this one took months to play out, right? So again, you got to be patient with some of these. And this was on the daily. On the weekly, it could take even longer. But on the daily, even this one took months to play out. It tried to pull you out a little bit because we did break down below the Kijun for a day. Held within the cloud though, which is another reason why I like using the cloud more than the Kijun. If we're kissing it, we're touching it, playing footsie with the Kijun the entire time. We're already down 80% on the bear market. You got to give this a little bit of a breathing room, read the room a little bit. Anyway, still never closed below the cloud once you closed in the cloud in that case. So currently we also have, this inverted head and shoulders. That's a mess. Let's be honest here. It's tried to pattern out a few different ways. 43.3, 43.5, whatever it is, tends to me to be the line in the sand that's important. I like the declining volume profile. So it should be fairly obvious. If this breaks down, you'll be in the daily cloud, you'll have a massive spike in volume, and that's it, right? It's probably going to 38 or less at that point. Otherwise, we break highs, also should be obvious. So that's why, again, the straddle type trade could be advantageous here. We also have DXY against us as a headwind, again, as a time capsule, right? This is the type of thing we're looking at here. DXY weakness may be related to this bank failure, I don't know, but it is above the daily cloud, right? It looks good. It looks good for highs. It looks good for continuation. So we may get this short time window where the Dixie is weak enough for us to break out, but then gets strong enough for us to reverse at the bullish targets up there. To add on to the confluence to the downside, in this case, you've got the 200-day moving average, the 200-week moving average, and you've got the yearly pivot. So I never expect more than the move through the cloud on the edge-to-edge trades, especially the weekly. Another question I get commonly, right? Typically, it's people who've either missed the trade or didn't have conviction to take the trade on the initial entry, and they're wondering, should I expect more? Or should I expect a reversal in the other direction? Those trades tend to not work out so well because we could bounce off the cloud like we did in the SVB March 2023 case. We could reach for the pivot and then bounce back, right? There's all sorts of stuff that could happen here, but this is the highest conviction trade from 43 to 38. We may wick to 35, right? You may have to pull some audibles if we're below 38, go down to a lower time frame, use trailing stop loss, that sort of thing. But the high conviction here would be stop loss at 44, target is 38 if we close in the cloud. As far as volatility is concerned, there's different ways to look at volatility. We can use Bollinger Bandwidth. We can look at math-based volatility, 30, 60 day, 90 day, whatever, right? Volatility has generally contracted here over the years, and we're kind of at a multi-year low, arguably, for volatility, even now. And you're kind of looking at this basically to decide, are we due for a high volatility move or not? We're not screaming on standard deviation of volatility up down here, but we're not at historical all-time lows. We're close, but we're not, crushing lows like maybe we are on the B-band width metric. Looking at the B-bands, I did a whole thread on this, so I'm not going to rehash that, but looking at the weekly, looking at 14 instead of 20 on the settings, you are getting some pinching here of the Bollinger Bands, which suggests a volatility expansion is closer rather than farther away. And we can look historically, again, backtest this. The hit rate, I would argue, is 100%, because what you're always looking for is a preview or a forecast of a move before the move happens. Maybe not so great in this case. And in mid-2023, it was a giant mess because volatility got super low. So as long as we're able to hold above 41.1, the B-bands in this low volatility environment are suggesting we move higher. So that's also helpful on your side if you are bullish instead of bearish, right? And it's another reason to wait on pulling the trigger on any shorts just yet. It's called a long straddle. You can do a short straddle, you can do it with options, futures, right? They talk about the option strategy. I'll leave this in the description of the video, but how this would play out here with a futures setup, because volatility has contracted, because the likelihood of continuation in one way or the other is kind of at a knife's edge, this is a potential way to play this. This is dangerous again because, right, we could spike to 43.8. You stopped out of your short, spike back down to 42. You're stopped out of your long, right? It could be a mess. But based on the fib extensions of the pattern, right, you're expecting kind of at least this level. The fib extensions on the inverse of the inverse head and shoulders, right, the breakdown would point you down here, which is, again, this is the cloud levels. There's also, I'm not necessarily a believer in this, but there's also potentially some sort of megaphone pattern that would bring you down to this level. Yearly pivots down there, right? So there's all sorts of reasons why this would be the level to watch for. And just visually, you can tell the risk reward for the short here is actually better than the long because your target is further away than your long target based on fib extensions. If we keep going, yes, I like the upper pivot, but that's very much a wait and see. Anyway, this is how I would set up the straddle, which is, again, dangerous and could be all sorts of problems depending on volatility. There's also this parabolic stuff that we have potentially. Again, I'm not necessarily a believer in this, but I'm not going to completely throw it out and say, no, that can't happen, right? We're seeing this in legacy, so it can happen. The alternative, of course, is just, well, this is just some channel. And again, this points to Confluence in that low mid 30s levels eventually. Once we get there, the bottom of that channel is going to pull up to around 34, most likely, if we break down. Here's the parabola on Meta that played out to a T, right? And we exploded off the top. So to me, this is very much blow off top territory, which is another reason why, if legacy rolls over, because it's so concentrated in these top names, that's another headwind for Bitcoin potentially on the risk side. Here's an older version of Tesla chart. We see parabolic moves on all sorts of stuff. So it's not super crazy to see a potential parabolic move into like the 70K range or the 100K range for Bitcoin. We saw one in 2016 and 2017. And, if we get failures on bearish moves with Bitcoin, that does typically mean that we're super strong here, right? Just like if I can find it, just like these 2018 failures on the bullish reversals, right? That is highly suggestive of, this is actually turbo bearish. If we can't even make it through the cloud, we are turbo bearish. So if we can't even complete a bearish move through the cloud here on the daily, that suggests, you know what, we're actually probably turbo bullish. So you definitely have to keep an open mind with that. Let's talk about alts real quick at the end here. I've talked about this in a few different ways, but again, what do you want to see? You want to see a thick cloud. You want to see bullish TK cross. And for alts, you also want to see us post-halving. If we dial it back to 2019, for ETH had on the weekly a bullish TK cross followed by a bearish TK cross. And then COVID happened. So this was a giant mess on the weekly. And you didn't actually get the bullish TK cross until you were in the cloud after we made new highs effectively. That was still probably good enough to be certain that, you know what, this is actually the trade. Ultimately, you got in the cloud, right? That was the first step. Didn't quite get there in early 2020. Fast forward to now, in the middle of the cloud, the stop losses look good as far as, you know, being above the Kijun, above the cloud. The target looks fine. It's just a matter of time, right? It's just a matter of waiting. It's a matter of opportunity cost. This trade has kind of come and gone now, right? Because the risk reward here arguably isn't as great as the initial candle, but that was the trade to take if you were going to take this trade. That's why you always want to watch these as they're playing out, and which is why I've got some specific alt charts on the mind. You'll notice Filecoin allergic to the cloud, not a good sign. Bearish TK cross, not a good sign in the moment, right? This could still play out, but this just says this needs even longer to be sure. Now, there's arguably some sort of pattern down here, as you'll notice with a bunch of these charts. Adam and Eve, triple bottom, inverted head and shoulders. Maybe this makes another attempt at a low. Maybe this ends up being an ascending triangle, whatever it is, right? Collectively together, all of that is saying it's best to wait on this. The one reason you'd take this trade is because the risk reward setup is pretty insane, right? You know, percentage wise. Again, you're running into market cap issues. This is like bigger than the biggest company in the universe, blah, blah, blah. I get it. But maybe this moves from 6 to 30. That's a 5x. I'll take it. If you do take trades like this early, I usually just say, you know what, my stop loss is lower lows. In this case, it would be like $3 on Filecoin. You know, you have to give this room and you have to be patient. It's been down only basically since inception, since listing. You have to be patient, right? So no, I wouldn't bet the farm on this. I wouldn't trade leverage on this. I'd give it time. Be patient. Flow is another one. You know, this is an NFT chain, I believe. It needs tons of time. This needs probably 6 months. But again, the setup here is quite wild if this works out. So that's why it's worth watching. I wouldn't take this trade now. You know, Filecoin arguably is a better trade in the moment because it's closer to the weekly cloud. But this one's worth a watch. It's on the watch list for a reason. Needs time, right? Again, maybe this makes a triple bottom. Maybe it doesn't. I don't know. Maybe it goes to new all-time lows. But it's worth watching. ETC, bullish TK cross in the weekly cloud. Okay, this is a setup that, based on the technicals, says, sure, this is a trade worth taking. Fundamentals are complete junk. There's a chart pattern on its side here, arguably triple bottom, double bottom, giant Adam and Eve, whatever, right? I don't even care. Nothing that says this is turbo bearish. Kind of similar to Bitcoin in 2016. You know, I had that initial spike into the cloud and then it took another 250 days to finally move. And this is probably going to move post-halving. This is probably going to move after Bitcoin makes its moves higher, right? But cloud setup looks good there. Doge is another great example. It doesn't do anything until after money and liquidity come back into the ecosystem. And the weekly cloud is even telling you, I'm allergic to the cloud right now. I'm hydrophilic and the cloud is water. I'm going to get denied. And that's what's happened. You don't have a bullish TK cross yet on the weekly. You just have to be patient. That's it. Be patient. Wait for the setup to present itself, but keep this on the watch list for sure. Algo is another one similar to Filecoin. A pretty massive, you know, from here it's like a 10x. From the entry, it's like a 5x plus, whatever. This will probably eventually morph into a giant inverted head and shoulders. You can kind of see it left shoulder, head, right shoulder when this moves into the cloud. I don't know if this is going to go to 150 or not. I don't care. But this is definitely a trade worth taking, in my opinion, as this gets into the cloud. And the reason, again, to watch these now is because you get these once a cycle, right? These setups do not present themselves maybe every 4 years, right? You know, this AXS is another one. I don't know if this thing ever comes back. I don't know. I don't care. But look, if it closes in the cloud with a bullish TK cross, yeah, sure, why not? Again, a mega percentage move multiple, etc., etc. Just got to be patient and wait. Dot is another one where it's just kind of shoving its way into the cloud. Fundamentally, again, another just nothing network of massive inflation. Nobody using this thing. Maybe this morphs into a triple bottom over time. But it's getting to the point where, yeah, this is a pretty decent setup. This is a 5x, potentially. Just needs time. Probably needs Bitcoin's halving in April. Definitely worth watching on the watch list. Now, as we get into the majors, you can see the difference here. If anything, Sol broke into the cloud early. It's held above any stop loss level, but your upside is limited here, right? Your downside technically is actually greater than your upside based on the cloud. So this is going to need a lot of time to twist on the weekly cloud, and realistically, you may not see a move of significance until Q4 2024 into 2025, right? This thing could just continue to range. None of the Sol maxis are going to want to hear that or believe me, but you just definitely have to be patient because the move kind of has already happened, and it happened a little bit early. Link, also kind of the same. I certainly like highs, but it's through the cloud already. Looks great as far as the stop loss levels are concerned. But you just got to be patient. This is going to take time to flip fully bullish. Cardano's one similar to Dot, where it's in the cloud, it's close to its key June stop loss, kind of bottomy type patterns. But once again, post halving is when alts do best. So post halving, the closer we get, that's when I'd get more confident at this potential like 3x multiple of a trade through the cloud. Then there's some of these that I just like talking about because they may never work out, and we'll see post halving if they have any juice in them. Not because I like beating a dead horse when it's down, but just like to warn people. Yes, this could form an inverted head and shoulders through halving, work its way through the cloud. That's at least the 3x potentially. That may happen very quickly, like it did in 2021. We don't have a lot of time. This is maybe 10 weeks, and you get like 2 weeks to make that decision. So I think the most bullish case would be like 8, which would be an 8x. Kind of similar here. It hit that first ledge, and then you got your blow off move to the top. But this is not a trade you take here at all, right? This is just on the watch list, and you're waiting. And then there's stuff like Zcash, which once again, nowhere close to a bullish TK cross, nowhere close to the weekly cloud. This is on the farthest thing away from anything that I want to touch anytime soon. So I know this was a long one, but you're looking for high time frames, thick clouds, and congruent TK crosses, often in a period of low volatility with a chart pattern. That's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.